So you might be thinking about becoming an auditor, and you might even have an interview coming up with an accountancy firm, or you might just be curious about what an auditor does in the world of finance. If you're in these positions, I'm sure you'll find this video useful because I'll be going over what an audit is, why do companies even need an audit, what your day-to-day tasks will look like as a junior auditor, and how your role will evolve as you get more senior in the firm. So let's start with what an audit actually is. And the textbook definition of an audit is to examine the financial statements of a company, and then the auditor provides an opinion about whether the financial statements are true and fair. So breaking this definition down into simple English, what it's basically saying is that the auditor will perform certain tests on the financial statements, and they'll give their opinion, but not an absolute guarantee about whether the numbers are accurate or not. Another way that this is often explained is that the auditor will provide reasonable assurance that the numbers are accurate. And this is why sometimes audit services are also referred to as assurance services. Now again, they won't say that they believe that the numbers are completely accurate, but they will give an opinion on whether they believe that there's no significant errors in them. These significant errors are also called material misstatements. And so what the auditor is actually saying is that they believe that the financial statements are free from these material misstatements. Another thing to clear up is the use of the word significant. When an auditor says that the financial statements are free from any significant error, what the meaning is that any entity that uses financial statements, so for example investors or lenders such as banks, they don't need to worry about any decisions that they make being impacted by the errors which are present. Another responsibility of the auditor is to make sure that the internal controls which are present at the organization are effective and are appropriate. One thing to remember at this stage is that despite all these responsibilities of the auditor, the directors are still responsible for the accuracy of the financial statements and to put in place the internal controls. So why even do companies get audited? So generally, companies are required by law to have an audit done once they reach a certain size. The overarching reason to have an audit done is to make sure that the stakeholders are confident when dealing with the company. And these could be stakeholders such as investors, lenders to the company such as banks, and even the government itself. So the first stage of the audit is the client acceptance. And at this stage, both the client and the auditor will agree on paper what the responsibilities are of each party. The engagement letter will be signed by both parties, and it will clearly say what the auditor's role is and what the management's role is during the entire audit. It will also state clearly whether the audit team needs assistance during special aspects of the audit. So for example, this could be IT risk. So clearly at the start, not all clients are new clients, and so the first stage might be continuation. The second stage of the audit is the planning stage, and at this stage the audit team starts to develop an understanding of the business, an understanding of the market that it operates in, and also all the risks associated with it. As the name suggests, this is when the audit team will plan the audit, and they'll set rough timelines for how the audit will unfold. This is also the stage where they determine the materiality threshold, and this is an important number because it's the number which all the items will be tested against. The third stage of the audit is the systems and controls testing, also known as the interim audit. This is the stage where the audit team will test the controls put in place by management and make sure that they're fit and proper. This is where the audit team will apply a skeptical lens to the controls in place, and even if there is an internal audit team in place at the organization, they won't just take their word for the controls being effective. One of the responsibilities of the internal audit team is to advise the management on setting up internal controls, but the external auditor still has to apply professional skepticism to the audit. The fourth stage of the audit are the substantive procedures, and this is also known as the final audit. This is the stage where the audit team will perform tests on the draft financial statements prepared by the management, and so they'll test the profit and loss balance sheet and cash flow statements. There are several different tests that the auditor can perform on the different line items in the financial statements, and I won't go through them here, but if you do want me to make a video covering all these tests, just drop a comment below and I'll be sure to make one. And the final stage of the audit is the completion stage. This is where the auditor will gather all the evidence and will give their opinion in their audit report on whether the financial statements are free from any significant errors or material misstatements. So I've created a small slide to show how these different stages fit together in a process map. The first thing to point out is that this is an example of a company whose year end is the 31st of December. You can see that the planning and the controls testing is done well before the financial year end, and the substantive testing is only started after the financial year end, because naturally the tests are done on the full year's financial statements, and so the auditor has to wait till the management prepare the financial statements. And on the bottom right you can see the final stage is completion, at which point the audit report is provided. One thing to caveat here is that in some cases the controls testing is started after the financial year end, but it really depends on the size of the company being audited. So what does the day-to-day look like for an auditor? So let's start with the junior auditor, let's say a first-year auditor, and most of your time will be spent performing substantive tests on the lower risk areas as determined by the audit team during the planning stage. So this could include accounts such as cash, trade payables, trade receivables, fixed assets, etc. So let's look at an example. Let's take fixed assets. One of the tasks that you might do as a first year is to compare the fixed assets in the trial balance to the financial statements. So you'll first look at the fixed assets on the balance sheet that's prepared by management, and you'll compare this to the trial balance and the net amount between the cost of the fixed assets and the accumulated depreciation. Another reconciliation you do at this stage is to reconcile the trial balance to the fixed asset register for each item. If those two numbers reconcile as well, the final thing you might do as a first year is just take a sample of fixed assets and ensure that there's relevant documentation to support them as well. When you're performing these tests as a first year, there will be fairly regular client interaction, but it'll largely be around requesting supporting documentation from them and for more information. Once you become a senior, so after 2 or 3 years, you'll have increased project management responsibilities during the audit. You'll be coaching and managing the first year staff, making sure that they're performing their tasks on time, and if there's anything to be reviewed by managers and senior managers, you're making sure that they receive these items on a timely basis. In terms of your own work, you'll be performing tests on higher risk items that require more judgment. A common example here is revenue recognition. You'll be looking at the accounting standards and making sure that the financial statements are in line with what the accounting standards say. Once you get to manager and senior manager level, project management and client relationship become an important part of your daily role. You're responsible for the delivery of the entire audit and making sure that it's delivered on time and on budget as well. You'll also be providing the client with regular updates on the progress of the audit and making sure that they're satisfied with the services that you're offering. Once you get to partner, much more of your job is revolved around winning new engagements and maintaining great client relationships. Yes, you'll still have some materials to review. It is your name on the audit report at the end of the day, but a large proportion of the reviewing is done by the senior managers. So that was a quick overview of what an auditor does and what your day-to-day might look like. If you have any questions, please leave them in the comments below. If you want to hear me talking about whether some myths about the Big Four are true or not, click on the video on your screen right now. Thank you for watching, and I'll see you in the next one.